This is your LMAX exchange technical update for Wednesday, October 25th, 2017. Euro dollar. So we continue to wait to see what's going to be with the euro. Is this a big bullish consolidation ahead of a continuation of gains in 2017, or are we seeing a head and shoulders top formation with the neckline at 116.60, which happens to coincide with a 100-day moving average, and a breakdown below there, which would expose a deeper drop into the 112 area? The interesting thing here is whichever way we break could mean the difference of a breakdown to 112 or a bullish continuation up to 125. So we're at a pretty critical inflection point. 116.60 is the level to watch below. 119.10 is the level that we're assigning as the level to watch above, which is a high going back to August and represents what would be the left shoulder of a head and shoulders top. If we break back above there, it negates, and we could be on the way for a fresh 2017 and plus 2.5-year highs. Sterling dollar. So cable market has pulled back over the past few sessions. Most of it has been chopping around here after the market has been consolidating above 130. There is risk on a short-term basis, though, for deeper setbacks in this market, with the possibility for a dip below 130 and ahead of 127.75. Ultimately, 127.75, which has been some significant now support, previous resistance turn support, should ultimately be a very good prop for additional setbacks in favor of what should be an eventual resumption of gains for a more significant medium and longer term uptrend now, following that breakout that we saw earlier in 2017 above 27.75. So short term, there is risk for pullbacks in cable. Medium to longer term, dip should be very well supported in favor of fresh gains, ultimately back above the 2017 high and up towards 140. Dollar yen. So dollar yen is coming back into the top of a range that has defined trade for much of this year. The top of that range is around 114.50, and so there is risk that this level is tested over the coming sessions. At that point, though, the market should look to adhere to the range and see another topside failure ahead of what could be the next major downside extension and a continuation of the range to the range lows down all the way in the 107s. Euro Swiss. So Euro Swiss has continued with its breakout, this time to fresh 2017 highs above the previous high that was in place at 116.30. The market is really focused now on a push up towards the 120 psychological barrier, a level that hasn't been seen since January of 2015. Any setbacks here should ideally be very well supported ahead of 113. Aussie dollar. So Aussie looks to be carving out a top in 2017 off plus 2-year highs. Most recent rally has been very well capped ahead of 80, and a breakdown below 77.34 will confirm a lower top in place by 78.98, about that high that we'd seen back on the 13th of October, in favor of the next downside extension exposing 75. Dollar CAD. So dollar CAD is in the process of finally correcting out from its plus 2-year low down just ahead of 120, and the market now could be poised for additional upside if it takes out that next key resistance in the form of the August high at 127.80. Look for any setbacks now to be exceptionally well supported ahead of 124. Kiwi dollar. The New Zealand dollar has continued with its intense decline and is now focused on a retest of the 2017 low from back in May, which comes in at 68.18. Any rallies that we see here should now be very well capped ahead of 72, with only a break back above that level to compromise this bearish outlook. S&P 500. The S&P 500 is consolidating just off another fresh record high this week, and the market, as long as it holds above 25.44 on a very short-term basis, the pressure remains on the top side. If we see a break back below 25.44, it could take the pressure off the top side and open some form of a correction. But again, until that happens, the pressure remains on the top side, and this is a market that continues to push up to record highs with the next key psychological target at 2600. Gold. So gold has seen some sharp setbacks over the past several months, but each time the market has been very well supported ahead of what could be another upside extension and continuation of gains. Ultimately, the structure here is quite constructive despite the setbacks, and we look for the market to put in a higher low, ideally ahead of 1250, in favor of that next major upside extension back above the 2017 high around 1357 and through the 2016 peak at 1375 further up.